good for sound? We are. Hey, welcome everyone to this session where we're going to be talking about investor relations. We have a really high quality list of guests here who will be giving you their perspectives on IR and fundraising in general and how to think about those things. So with me I have Shamila. Do you want to just give a few words about yourself and your background?
Yeah, sure. Hi everyone, I'm Shamila. I'm a principal at Dawn Capital. We're a B2B venture fund based in London but investing all across Europe. About 3 billion AUM today. Super nice to meet you all.
And we have Annalise.
Yes, hi everyone. My name is Annalisa Dragic. I'm a partner at Sapphire Ventures. We're a US and European headquartered VC fund focused on exclusively B2B companies investing at the growth stage. So 1 or 2 stage later than Dawn, kind of Series B into IPO.
And I'm Mikhail. I'm co-founder and general partner at Ox. We're a specialist niche B2B SaaS investment firm investing at Series A and Series B. Shamila and Annalise, I thought, we're always going to focus on the relations side of this, but we can't kick off a panel about fundraising without talking a little bit about the fundraising climate. What's it like out there? Are deals getting done? Are there more casualties by the roadside? What's happening to amounts, valuations, structure, etc.? So feel free to comment.
Yeah, happy to start. I mean, we had the Excel presentation yesterday looking at the Euroscape, and the data that they showed was that quarter over quarter in Q3, the invested capital in Europe was down 42%. I think sitting in the investor seat, we see that, right? I'm investing a bit more at the growth stage, so kind of Series B and later, as I mentioned, and that's quite quiet this year, right? If you look back, in the last 18 to 24 months, companies raised a lot of capital, are still sitting on a lot of cash. And so at least at the growth stage, I think definitely deals are still getting done, but at a significantly less rate as the data shows. I think earlier stage, there's still a little bit more activity. I don't know, Shamila, what you're kind of seeing in the
Yeah, I agree. I think there is a bit more activity, Series C especially, Series A as well, some Series B, but I think fewer and far between. I think what's happening is that everyone's trying to find the clearing price. And I think that just takes a few quarters to essentially play out, right? Because you want to figure out, as an investor, like how much is this business worth? And as a founder, how much dilution should I take for this business? And I think there's just been a lot of noise around getting to the clearing price, even at Series A, to be honest with you, especially for the bigger Series A deals. So I think until that noise essentially quiets down and an equilibrium is found, there will continue to be stillness and almost inaction at investing checks of more than 5 million or so.
Yeah, and certainly what we're hearing is, so we're not typically doing seed stuff, but what we're hearing from our upstream partners there is that the valuation adjustment that happened in the public market, then at the growth stage, then at Series A, Series B, is now starting to hit the seed stage as well. So it's probably a good thing to be prepared for that as you go out and fundraise and set expectations accordingly, right?
I think, one other, point that founders shouldn't, lose sight of, though, is, there's never been more dry powder in the European ecosystem than there is right now. So I think, yes, we're dealing with kind of from a macroeconomic perspective, what is happening with interest rates and inflation. We obviously have the conflict in Ukraine right now. There's a lot of things happening from a macroeconomic perspective that's obviously impacting in private valuations and how that's going to play out. But I think also there's just a huge pool of capital that is looking for a good home, looking for investment opportunities. So I think the capital is out there. It's just, I agree with kind of Shamila, it's trying to figure out a little bit of this ambiguity. Where is the world going? What's happening? Where can that capital find a good home to invest? So if you're an entrepreneur and you decide to actually go out and fundraise now, what are the key things to think about, and what should you be expecting out there? Do you need to adjust the plan? Do you need to think about more about profitability? What are the key things to keep in mind here?
I think one of the things that's changed the most actually is how much time these processes take. So if you think about 2020, 2021, super high velocity situations, right? You kind of show up 3 days in, you have a term sheet, even for some of the larger rounds, right? Because lots of investors were really keen about investing. The public markets are doing extremely well. And frankly, the market opportunity still is there, right? I think what's changed a lot actually is just, and for me I think it's a positive thing, more time for founders to get to know their investors and for investors to get to know who they're investing in. And I think that increased courting process could have taken a few days in the past, maybe taking weeks now. And I think as you go out to raise, being aware of that is super important. And then the second thing I would say is there's this tension between a declarative hope for the fundraise you have and essentially teasing out exactly where the market is. And I think that's why I see a lot of founders getting it wrong, right? Which is walking into the room and thinking, I'm going to raise 50 million on, a pre-revenue business, for example. Yes, that's happening. Don't get me wrong. There are founders still doing that. But I think setting that assertion up front will alienate a lot of investors who are thinking a bit more carefully about discipline and valuation and pricing. And I think for me personally, it worries me because I don't know if you've adjusted to the new reality of the market. So I'm thinking to myself, have you realized what's going on around you, right? So I think those two things for me are what are important to keep in mind as you kind of go out to think about raising capital right now.
And do you want to see companies that come to market now, if 12 months ago it was all about growth, right? Do you want to see now that they have a plan which is like capital efficient, takes them almost to profitability if necessary, or like what are the metrics that you're sort of like thinking about and looking for?
Yeah, I mean, we're still venture capitalists after all, right? We're not private equity buyout investors. We're not necessarily growth equity investors, right? We're not looking for those companies that are already cash flow positive and growing at a much lower rate. Like we are looking for those. At Sapphire, we talk about building companies of consequence. It's those next companies that are going to be truly disruptive in their space and are growing at a rapid rate. So we're still looking for that growth, right? I think it comes down to, and especially at the growth stage, like, okay, if you're going to raise 50, 60, 70 million dollars, what's your plan? How are you going to use that capital? And of course, a chunk of that is going to continue to go into product and into R&D and to build that out. But another chunk of that is going to go into the commercial scale up. And what does that go-to-market engine look like today? Do you have a good understanding when you put dollars into the top of the funnel of what return that's going to be for you in terms of net new ARR, and how does that play out longer term? So I think in general, we're still very much focused on growth and looking for those companies that truly want to be companies of consequence, but it really comes down to having like a concrete plan, and do you have an understanding of how you can use this capital in an efficient manner?
Excellent. I'm going to change tack slightly here because I think there's a lot of people at this conference who have just raised their first checks or actually just about to raise their first checks. So I wanted to talk a little bit about, how do you guys want to get to know companies and entrepreneurs? Because I think that's something that's quite misunderstood by a lot of people. So would you, care to comment on that without me necessarily leading you with any questions?
What a leading question. Yeah, I mean, I think at Dawn, we've always preferred getting to know founders over the long run. If I think about some of our most exciting investments, we've known founders for a year, maybe even 2 years before we've actually invested in them. That's the way we like to work, and that's because, from our perspective, and from the founder's perspective, I think it should be that you're actually, you're courting, right? And you wouldn't necessarily marry someone you've known for a day. You could, but I hope you'd spend at least 2 days getting to know them, right? So I think for us, that's very much our perspective, which is, in the long run, we want to show founders that we can be valuable to them, show them that we can actually help them as they go through their investment journey, as they raise and build a business, invite them to meet a lot of the partnership team, a lot of the associate team, just get to know the Dawn team, right? And I think that is how we've always preferred to invest. In an environment where things are moving faster, of course, we can also move faster, we can be agile, but I think that does give you a chance. And I think when you have those meetings, what I always find most impressive is when founders have very clear objectives and milestones for exactly what they want to achieve in the next 3, 6, 9 months. And it is glorious as an investor to see founders actually meeting those targets. I think you can't underestimate how much trust that builds between you and who's giving you capital. So that's my preferred way of engaging with people. Super.
Annalise, anything to add to that?
I would completely agree. I think it really comes down to like building authentic relationships, right? When I'm partnering with a founder, I'm joining their board. I'm on their team, right? I'm working for the founder. So I think it's also taking that time, right? Like I've met a number of founders here at SaaStock who have yet to raise their Series A. Like that's not for Sapphire's strategy to invest at Series A, right? But getting to know them, to understand the product, but also be a sounding board, right? I think we're talking about all this kind of uncertainty in the market right now. They're thinking, hey, do I take a convertible? Do I do a bridge round? Do I go out for that large Series A, smaller Series A, right? Like I spend my whole day in the markets, thinking about these things, that's where I can be helpful to those founders, even if I'm not going to be giving you a term sheet tomorrow, right? So I think it is that kind of longer term approach to building a relationship and understanding, can this person be an effective board member for me and really help kind of accelerate the trajectory of my business?
And I think it works both ways, and this is what a lot of people, I think, on the entrepreneurial side missed out in the last couple of years. Like, yes, you can do Tinder dating with VCs and get a really quick term sheet, right? But you're stuck with these people for multiple years, maybe all the way until you exit the company, right? So it is a marriage, and it's really hard to get out of it. So as an entrepreneur, the benefit of having a slightly less frantic climate is you can also do your due diligence on the investors, which is something which is kind of sadly overlooked, at least from my perspective. Would you guys agree that entrepreneurs should be more interested in really asking the tough questions to the investors?
Yeah, 100%. Completely agree. And I think that's what time gives you, right? I think if you have known Annalise and myself, if you've known a person at either Sapphire or Dawn for 2-3 years' time, ultimately you're testing them. But I think you should also ask other founders. I always say to people, before you take money from Dawn, call any of our founders and ask them about us. And if they say terrible things, that's actually helpful as well, because then I know what we're doing wrong, right? But 9 times out of 10, they're going to say fantastic things, and that's very, very important. I think that feedback loop is just so critical to have. And by the way, we do the same with founders, right? Before we actually invest in them, we spend the time, obviously, getting to know them, but also hearing from people who've worked with them, worked for them. So I think two-way diligence is absolutely critical to a successful working relationship.
I think also, in addition to kind of the relationship side, right, I think it's important for founders to think about like what type of investor at what stage is kind of best for them and what kind of value add they can bring to the company, right? I think a lot of times when we're investing at kind of Series B, Series C, a lot of B2B companies that are headquartered here in Europe are thinking about the US market and how do I make that successful? And so, okay, great, well, we have a whole team that can help you and go execute that. But if you're a seed stage company sitting here in Dublin, you might not be thinking yet about, okay, in 3 months' time, I need to open up my office in the US, right? I might actually need help hiring engineers in Dublin yesterday, right? So I think also it's part, of course, yes, it's about finding like a good relationship, someone that you can partner and work well with, but I think it's also about kind of the firm and what else they can bring to the table for the stage that you're at.
Yeah, so investing as an entrepreneur in a team, investing the time to get to know the investors out there and understand who's right for you at what stage, and culturally, where's the fit and who do you like to work with, because it is a marriage, which is super important. I wanted to ask you as well, because if you want to meet companies very early on, which we think very much the same way, we love to build relationships over several years and track companies. What's the best practice for them to keep you guys informed and updated? Because you have tons of companies to invest in, you have a portfolio to manage, you're super busy people. You can't spend all day catching up with things that will become relevant in 12 to 18 months. So how should they think about, what's the best way to keep you guys informed and up to date on their progress? Is it like email blasts? Is it like doing quarterly coffees or lunches? Or how do you think about that?
Yeah, go for it.
Yeah, I can go ahead. I'd say probably 3 things. And I guess maybe it's slightly different sitting a little bit later stage, but I have a lot of founders that it's, every 6 months we're kind of catching up. Okay, beginning of the year, what's your plans for the year? What are the initiatives, things you want to achieve? Okay, maybe summertime, we're catching up, how are things going? And then like end of year as well, right? And thinking about next year. So that's maybe kind of cadence in terms of just having 20, 25-minute catch up, here are things going. Of course, like any investor updates that you want to share and send those over email, like I'm happy to get those in my inbox and like read and hear how things are going, because that also can like spark ideas, right? A lot of times we have companies and it's like, oh, okay, like this product, actually maybe you should think about kind of a go-to-market partnership with like a Sapphire portfolio company, right? We have Clary, 6 Sense, ChargeBee, all here. Like we have a lot of early stage companies that are like, oh, there could be potential product or go-to-market overlap with those type of companies. And then sometimes I get those ideas reading those investor updates. And then the other thing is I'm happy, to get messages from founders of like, hey, I'm thinking about, I really need to hire an amazing chief marketing officer. Do you have anyone like in your network as well, right? Which is another data point of how are things going? Who do you need to add to your team? What about customers? So if there's ways also that we can kind of trial out how we can work together, happy to get those updates as well.
That's great input. So an interesting question that is unusual, but it happens. I just want to get your take on this. So some founders who are great product people or great salespeople, they just don't want to bother with fundraising. So they leave that to like CFO, VP finance, or some corporate development person in a 12-person team or whatever, right? It's like, what are your reactions to that? Mine are pretty obvious, right? So it's like...
I think that you love it, from what I'm hearing from you. No, I think a lot of founding teams, first of all, a founding team, a team is more than one person, right? And different people in any team have different strengths. And if you're a founder who doesn't want to fundraise, that's fine. But who in your C-suite is going to help you tell that story, right? I think it's important to figure out what your strengths are and then find somebody else in your team that can cover your weaknesses. And if you really feel you can't talk to investors, find someone in your team who's relatively senior who actually can. The reality is, ultimately, when we invest in a business, we're investing in, when we're Series A, Series B investors, right? We're investing in a person. We're investing in a CEO. So if we don't see you, we can't invest. If we don't, get a chance to get to know you, connect with you, we can't really make the decision, right, about whether or not we can put capital into your business. So if you don't like the process, involve somebody in your C-suite, hopefully a co-founder, right, who's able to kind of bring the story forward, and then insert yourself appropriately when you feel like you've gotten enough early conviction on who your investors are. And I've seen that work really, really well. We have seen some companies come out to raise using partners, and I do think it feels very, very different for a seed Series A investment versus a Series C+. When I was at SoftBank, we used lots of partners. It was totally fine. It's a structured process, lots of data, lots of numbers, and actually, truthfully, the team is an important consideration, but the machine works, and if the numbers are great, you're probably going to, be very, very positive on the deal. I think at Series A and Series B, the story is rarely that clear, right? There's always something that needs explaining, something that needs to have worked out on it. And I think for that, staying close to that process and making sure that someone with the founding DNA is involved is quite critical.
Yeah, I completely agree. I mean, I think fundraising, though, I don't think it's ever on the top of any founder's enjoyment list, is like a key part of the role, right? And as you get kind of later stage, the reality is you're kind of always fundraising, right? You don't know when things are going to pop up that, oh, maybe there's a interesting acquisition that I might want to pursue and I have to get some financing for that. Like that is part of the CEO, of course, with the CFO to think about it, but it really is, how do I capitalize my business? I think also part of that is like working with the board and the existing investors as well, right? Like I don't feel like a CEO should ever kind of go into a fundraise where they feel like, oh, everything is on me and all the pressure is on me, because you have your team, you have your, of course, management team, but you also have your board that's there to support you in that process as well.
That's a great segue to the next question, which was really about, so you've raised some money and you're going to outraise again. How can you leverage your board? Whether that's for fundraising, whether that's for help with planning, with recruitment, et cetera. How should you think about the board? Is it just like this governance function, or like is it only the advisory function, or where do you guys fall on that spectrum, sort of? And like what would you recommend is like the best use of a board for an entrepreneur out here?
I would hate to be described as a governance function. I think that would mean that I've done absolutely nothing on the job. I mean, I think it's exactly as Annalise was saying, right? You're a fellow team member. And you have strengths, and they should be relied upon. So a lot of our companies, when they go out to fundraise, for example, you should be using your board to ask them, what's the market like? Question one, is this the right time? Like, what are you seeing across your portfolio companies? What are you seeing at later stage versus earlier stage? Is this the right time? If yes, what types of deals are you seeing get done, right? What's the shape of the companies? What's the size of the rounds? Who's actually active in the market, right? VC in Europe is actually a relatively small community, so we'll know the answers to all those different things. I think there's a bit of a strategic planning around the fundraising process. I think the second thing as well that we often do with our companies is actually just support them with like their equity story. Because ultimately, it's a bit of a weird one, right? The fundraising customer is other VCs, and who best to sell to other VCs than the VC you have on your board, right? We know much less about customers than you do, but we probably know a lot about VCs. We know what's going to land, we know what questions they'll ask. And so relying on your VC to help you craft that narrative and put you in front of the right people with introductions, I think is very, very important.
Yeah, and I would add as well, like practice. I think this is very much like a underutilized tool by founders that I see, but like practice with your existing investors, right? And like, I'm happy for a founder in our portfolio to come in, go to our investment committee, and like, when they're like, ask me like the hardest, most blunt like questions that you can, I feel like those are the founders who are then like best prepared for a fundraise, right? Because you see that, right? Even us sitting in the investor seat and like listening to pitches all day, like once a founder has like pitched like 10 plus times, like it just gets like crisper, they know answers, they have the numbers top of mind. So I think like one a very small thing but can be super powerful is like practicing with your existing investors. And then I think even outside of fundraising, as you mentioned, is just like put your investors and your board to work, right? I think like for us, we have about a fourth of our team, which is our portfolio growth team, which are all just ex-operators and work with our portfolio CEOs and management teams. And that can be, of course, on recruiting and talent, which is always in high demand, but customers as well, or international expansion, or understanding what's happening in the capital markets, right? All these areas that can be kind of beyond just the day-to-day operations of the business, but where kind of networks or expertise or seeing things before, advisors, like those areas I think are all areas that kind of a VC can be super helpful.
And to be helpful in situations like that, is that how closely involved do you guys want to be on the operational side and big breath? Do you want to be part of like Slack channels, internal WhatsApp groups on topics and stuff like that? It's like, how deep do you want to go?
I think it's up to the founder, right? Like, how do you want to use your board? There are founders who WhatsApp you all the time with their needs, and there are founders who actually hate hearing from VCs and actually want to send you an email every month asking for help, right? And I think it's very much in the founder's court, right? Figure out how you want to communicate with your board. I think your board shouldn't control you. You should be in charge of it. You should be dictating when you want to engage with them. You should be dictating how you want to engage with them. You should be making asks. They should be making additions to those and supporting you in seeing your blind spots. I think the worst thing to do is like get your board to join your Slack channel because they said that they wanted to, right? It should be something that you think is the right thing and that you think is the right way you want to get help in the business. And I also think that changes from early versus later stage. So if I think about like some of the boards that we had for our bigger businesses, the engagement may not necessarily be as robust, right? It's a big team, there's like 7 C-suite people, they're all running things, hopefully they're all very competent. And so perhaps the day-to-day engagement you needed at seed stage or Series A isn't necessarily the same as you scale over time through the business.
Great. We actually wanted to allow some time for questions from the audience. So if there's any questions out there, please raise your hand and we will try to have a microphone sent your way ASAP.
Any questions? Now is your time, ladies and gentlemen. Yes, sir, over here. For your safety, I'll hold the microphone. Please introduce yourself, your company, and your question.
Hi, Joe from Firefly Learning. You said that founders should ask you tough questions during the investor diligence process. What would you advise some of those best tough questions to be?
I can start. What's the toughest, worst decisions you've had to make which involved the founder? How did you go about that discussion? You know, typically this means removing someone from their office, right? How did you go about that process? Would that person talk to you today? Would they recommend working with you? Because you really see the true colors of an investor when the shit hits the fan.
I would add to that as well, I guess. You know, when you ask an investor for references, they're probably going to send you their best companies, right? They're going to send you the guys that love them, the guys that like say fantastic things about them, right? You know, and so if I had the chance, I would actually say, can you put me in touch with a company that has struggled? Just to hear, again, how you helped them, how you supported them, and whether or not they still talk to you.
For sure. And I think I would go even like deeper on that support, right? Like what did that also mean from like dollars, right? Because a lot of times like, you know, companies, it's never always just like everything is amazing and everything is up and to the right and you IPO and it's all magical. No, there's always ups, there's always downs, right? And so I think also that support is like, what did you do as a fund? Did you stand behind founders? Like what did actually that support like really look like?
And I'm coming back to what we talked about earlier, doing your due diligence. We're, you know, believe it or not, we're actually decent salespeople, right? So we will put on a show and sell you on things. Doing the diligence on that, what you just said, is like, what was the value you provided? You shouldn't take our word for it. You should ask people about that.
I think we have room for one more question.
We do.
Mikkel?
Yeah.
This lady over here. Please introduce yourself. I'll hold it for you.
Oh, thank you. Alexandra Wah at Silicon Valley Bank. Last year, there was a lot of investment going into startups, and it was very difficult, I felt, for a lot of VCs to get into companies. I'm kind of interested about how your sales pitch has changed this year and why you're sort of saying that companies should work with you to reflect this fact that less VCs are investing currently.
Yeah, I don't think our pitch has changed at all, to be completely honest with you. I mean, if you were a founder raising with Dawn, the first thing I would tell you is that we would absolutely help you through the journey. I think what's changed is when the pitch is done, perhaps, right? Perhaps it was happening day one, maybe it's happening week one now, but the pitch is absolutely the same. I mean, ultimately, we've just raised a new fund. We have lots of capital, as Liz was saying. We've done 2 deals already, so we're still actively looking to work with founders. And so the pitch in terms of what good looks like and how we can help you and support you in your business hasn't changed. I think what's changed is how it's done and perhaps the terms around it.
Yeah, and maybe just to add to that, I don't think for Dawn or Sapphire, right, like our investment strategy, kind of where we play in the VC landscape has changed at all last year to this year, right? I think you saw a lot in second half of 2020, 2021, a lot of different players in the broader like VC ecosystem, like playing in different lanes, so to speak, that wasn't necessarily their core lane, right? You saw public markets investors coming into private markets, later stage private, going earlier going later, right? And I think we're seeing that kind of go back a bit to kind of how things were in earlier times. So I think you, as a founder as well, like try to understand really like what is the core investment like focus of the firm and are you going to get the attention that you need? But I don't think for either of us, in terms of how we work with founders or pitch has changed at all.
I think for us, the thing that has changed is how you think about cash planning. Whereas previously, you knew if you have a company that is performing, you can start fundraising with 6 to 12 months of runway. We've propped up all our companies with 24 months plus a runway by now because you just don't know when the market is going to be back and attractive. So that's just good insurance policy.
Is there still time on the clock?
There's 23 seconds. I don't know if that will fit a question in that.
For the courtesy of time, we'll leave that then. Are you 3 on the networking app? Would that be a channel to ask you questions or?
Definitely.
Yes.
Yeah.
Yes.
So, gentlemen in the front over there, I know you had a question. So maybe if you get a networking app, or I'm sure you guys will be around for today. So, ladies and gentlemen, please join me in thanking Mikael, Samila, and Annalisa. Thank you.
Thank you.